Good morning, good afternoon, good evening, traders from around the world. My name is Trader Allen. My website, wallstreet2easystreet.com. It's Wall Street, the number 2, easystreet.com. And I want to take a few minutes to go over with you the importance of knowing when to trade and when not to trade. We want to trade when we have a lot of volume or a lot of activity going on in the markets. That's when the most strategies are likely to work, whether you're using a pattern-based strategy or whatever it may be. So I wanted to discuss with you how you can tell when to trade and when not to trade. So I added here at the bottom of the chart an indicator that measures how long it takes for each bar to form. So I trade up here. You can see I trade on a 70 tick chart. And what the indicator does is it measures how long it takes for each bar to form. So the shorter the bar, the faster it took to make that 70 ticks occur. So what we can see here is really simple. It's a visualization of trading activity. So we can see from roughly, this is the Eastern Standard Time. So roughly from right here around after 7 o'clock, about 7:10 to about 8:10, there wasn't a whole lot of activity going on. It kind of seems to dry up. You can see a lot of the bars here, the spikes, how long it took for them to form. And as we get closer to the US market open, then volume will start picking up. So from about 9:15, you can see trading activity starts to pick up. Now this is the best time to trade, of course, if you're going to trade the US market, is when the stock market is open. So the bank opens back here at 8 o'clock. They're still trying to figure out which way to go, which way to place their orders. But from around the time that the market starts to open to over here to about 10:30, you can see the volume activity was going along really fast. It didn't take very long for any of these bars to form. And from about 10:30 all the way up to 3:30, you can see it's taking longer and longer and longer for the bars to form. So we know that orders are drying up, volume is drying up, and our patterns that we want to trade are less likely to work because there's just not enough volume behind the moves. So when we want to look at, especially like a breakout strategy or a pullback strategy, you want to trade in this time frame here from around 9:15 to about 10:30, and that's where when you're scalping, you're going to get your best opportunities. We can see here, we'll shrink this up. Now this chart here, this is the euro yen. The previous chart was the euro dollar, and we can see the same thing here on this chart. From around just after 9 o'clock all the way up to around 10:30, so from this time frame here all the way to here, that's when we have the most activity. And there again, that's when our patterns are more likely to occur and be successful. So I hope you enjoyed watching this video and get a little bit more understanding of knowing when to trade and when not to trade. You don't need the bar timer that I have here at the bottom. You just need to be aware of when the market's likely to move. So I hope you enjoyed watching the video, and feel free to check out my webpage at wallstreet2easystreet.com. I thank you and have a good day.